People have understandably been struggling to figure out what to do after the FTX collapse, the Voyager collapse, the Celsius collapse, of course, the Luna 3AC collapse. You name it, it seems to be collapsing. And of course, yesterday, the news right after the live stream that BlockFi expectedly also has declared bankruptcy. Now, a lot of people are asking the question how to manage their portfolio, how to trade their way or invest their way through this period after seeing either their portfolios completely disappear or just in general a shaky market and being scared of what is to come. I've got an expert today, CryptoBirb, my friend, here to join us and talk about how to manage your portfolio through this contagion and this collapse. He wrote an amazing PDF about it and has done quite a bit of thinking on this topic. So I'm interested to hear everything he has to say. You guys don't want to miss this one. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and gently caress the like button. Hope all of you are doing well today. I was gone, as you guys know, for about 7 days, came back yesterday. It was good to be back, felt good to be back with the community, talking to you guys, sharing our thoughts, and going over the, oh my God, so depressing news. And like I said, even before we had all this depressing news to talk about yesterday, and that was before BlockFi officially declared bankruptcy yesterday, just hours before. But I think that actual event, and it's been sort of proven by the reaction of the market, was somewhat priced in. I mean, nobody was surprised to see that BlockFi, after halting withdrawals and knowing that they had already been bailed out by FTX, was going to end up declaring bankruptcy. It was a foregone conclusion, and so it was really just a matter of when and not a matter of if. But man, very strange when you dig into it to see sort of the incestuous relationship between all of these companies, and very obvious to see why there's been such contagion. I mean, when you dig into the books of all these companies, every single person that FTX seemingly was bailing out, they also owed money to. So as you look at it now in hindsight, it seems that basically FTX was bailing people out with funds that they had borrowed from those very people to avoid having to pay back those loans and to make themselves look solvent, right? Give these companies a bunch of money in theory, but then those companies give you loans. I mean, it's just absolutely insane. But there was no way the BlockFi was going to survive that. And now we have another six-figure number of creditors out there looking for answers and hoping to get some assets back. There's been some bad reporting on the BlockFi case as well, just to clarify. I wasn't even intending to talk about this, but now that it's top of mind, before I bring on Burb, I just want to mention it. I saw a few people saying that BlockFi had, first of all, they reported in their paperwork 1 to 10 billion in liabilities. That's a pretty wide spread. 1 billion and 10 billion are very, very different numbers, but they had 1 to 10 billion in liabilities and only 200 and something $1 million cash in hand. That is wildly inaccurate, or I should say inappropriate reporting, because the assets, cash in hand is not the same as assets. And it also said in the same paper that their assets were 1 to 10 billion dollars. Again, a large spread, but that just saying that they have 10 billion in liabilities but only 200 million in cash is irrelevant if they were holding, say, $10 billion in crypto. Assumingly they're not, but I think that probably BlockFi creditors are in better shape than, say, FTX or Celsius creditors. Anyways, I think it's very, 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 very clear that it's time to be exceptionally careful and to have a plan. And that's something that my guest today, my friend CryptoBirb, has talked about countless times. You always need to have a plan. You always need to know in advance what you're doing. You always have to have a reason why you're doing things, and you always have to stick to that plan, even when your emotions in the market get in the way. I'm going to go ahead and bring Burb on right now. Burb, what's up, buddy? How are you?
I'm great, homie. Great. I'm speechless. Overall, I'm speechless. You know, when you throw in all those strong, heavy, racks on the people for the entire year. I'm talking about, again, not only Luna, Terra crash, right? But there's like so much insolvencies going on. So like this FTX shit, man. I mean, this has been insane. I mean, I didn't lose personally a bit in there. So I've been lucky not once but twice this year, or I've not been unlucky basically. But it's just disastrous. It's insane. It's devastating, and it shouldn't be happening in the first place.
Yeah, slowly we're seeing reports of, influencers, obviously other companies, friends of ours who are kind of coming out and saying they lost everything on FTX, right? I think it's interesting now, my feeling thinking about this as we speak is like Celsius and Voyager, I think affected a lot of people in the space, but disproportionately affected like new retail investors who thought it was a bank and maybe their only crypto was they bought a bit of USDC or Bitcoin or Ethereum and put it on those platforms. FTX is where everybody in the community was trading and holding their funds and what they viewed as exceptionally safe. Clearly, they didn't learn the lessons from Voyager and Celsius, but we can understand that because of the way that SBF was perceived. But this seems to be having much wider ripple effects within the really crypto native, passionate supporters. Is that what you see as well?
Yeah, I tell you what. Recently, I went to Dubai, for this crypto fight night. Right, it was pretty cool experience, and many of those crypto guys, were there, and many happened to be my good friends. And whenever I spoke, kind of like to big majority of them, like 7 out of 10, basically lost money on FTX, and we're talking again 7-8 figures, right? We're talking about a couple of tens of thousands of millions, basically, kind of like lost. So it's it sucks. I cannot even explain how much it sucks. Like I said, myself not being unlucky twice this year is already kind of like probably a luck to it. But when I think about that, it's anyone who's saying it, that they predicted that, or that it was so obvious that FTX would collapse. Like, where have they been, like, ever since, right? What did they do to warn people? Like, of course, it was not expected. Nobody could have expected that, right? Because this was the top two name, basically the second top tier exchange in the world, right? I held it once, a lot of money in there as well, but I overall, try to just go outside of CX's to the Trezor whenever I could, to the other wallets. I have a couple of Trezor, couple of different wallets everywhere. So it's I guess it's always going to come down to this old saying, that you never hold all your eggs in one basket, and that's all it regards. It regards also stable coins, right? Because if exchanges can collapse, then stable coins can collapse as well, because they are centralized to an extent. So there is nothing, standing in the way that, Feather chain reaction again can come in, right? And we have the miners hanging off a cliff, basically underwater, for a long time already. They're barely, alive. Community is barely alive. It's become a ghost town already. But those who are still here, basically still kind of like try to persist, and it's not easy. The companies are going insolvent and bankrupt, like you said, left and right. This is a very destructive and very depressive, I think, moment in the cycle that we're looking at. And typically, not long after, it's usually followed by some sort of, like, light at the end of a tunnel, and this uplift in the market. So that's what I'm personally waiting for, man.
Good. So let's focus on the positive then, because I think that we've beaten the negative to death. Us here on every channel, our entire community, Twitter, right? And I think you just touched on the most important point. Is right now we're seeing the mainstream media stories about crypto bros selling their G-Wagons, and that the price of watches going down because of crypto guys who are selling all their Rolexes. I mean, now we're starting to see both mainstream, and I think we're seeing mainstream bottom signals by the way that they're reporting on crypto. But also, I think we're feeling the real desperation and capitulation. People are disappearing. The community is smaller. There's no new retail. This feels bottomy to me. I don't care if this price is the bottom, but I think that we continue to bottom here. Listen, the price didn't even move down on the BlockFi news, as I said. So let's focus on what you do next. Let's say that we are in a bottoming situation here. You may agree or disagree. You wrote an incredible PDF. You've been focused, and I love you for it, that you're always focused on the positive, right? I can always tell your approach is this bad thing happened. Let me help you try to get through it, right? And so what are you advising to people? Obviously, you have a huge community. How are you now approaching this? And how do you think people, I've seen, like, you have the PDF. It's like, you lost everything. Here's how to make it back. Let's talk about that.
Yeah, I can screenshot that actually if you want.
Sure, please. Yeah, go ahead and screen share it, then we can see it. It was actually on my, as I told you right before, it was on my list of to do this morning, but I ended up being tied up with the kids, so I didn't actually get to read the PDF. But we'll go ahead and bring it up.
That's fine.
Yeah.
Is it on?
Yeah, it's on. You're up.
Cool. Yeah. So for everybody's notice again, this is a quick guide, limited guide. That I decided to limit it because it's short, right? It's not. You could probably make a book out of that, but it's kind of like I tried to condense it in a short form, because again, I know that many people have got completely wrecked, devastated, distracted, for the portfolio destroyed. I've been there and done it in the past. I know how shitty it feels. I know how difficult it is to make it through this way. And like that's just my way of kind of like giving back to the community, right? So I prepared this PDF guide that is free for all at any time, 24/7 up on my website. And it says how to turn absolute worst investing mistakes, right? Even if you go complete bollocks, into a profitable trading strategy in under 30 days. And this is where it includes a lot of reasoning and tips on how to improve, how to recover ground up, starting off from the mindset, then to actually reach this profitable system and start getting profitable in under 30 days. That's what it says. So of course it's a long text. This is just some very short overview. I'm not going to read it out loud, of course.
Yeah, just give us the greatest hits.
But yeah, of course. But this is all to say that I've been there and that. I've made all those varieties of mistakes, fighting your tape, oversized positions, letting losers run, not cutting the losses in time, following fake gurus or ignoring the reversal indicators, again, keeping all money in one basket. All of that happened, right? This is just kind of like an example for nothing. Like, I'm not bulletproof. There is no winner that continues to win 100% of the time, right? It's impossible. And for you as a trader, I think that you have to understand that if you lost a lot, that it happens. Like, shit happens. You're allowed and you're okay and fine to feel bad about that, right? You should allow yourself to have those feelings. You should not stop kind of like pretend that everything is okay, because otherwise it's not going to help you leave the denial stage, right? I know people, like I mentioned on yesterday's closing webinar for the Free Trading Congress, I know people who live their life into denial, and that for the decades, they never escaped the denial because they couldn't really accept the reality around them, right? And we have within our mindset, within our mind, and this sends signal to the body, we have ego defensive mechanisms, right? This is an emotional bias where anything that comes from the outside that kind of like tries to conflict our views about ourselves, right? It generates this cognitive dissonance. This exposes you to confirmation or confirmatory bias, where you would overweigh the let's say you have a list of 100 comments, right, or 100 news pieces, and 97% of them, 97 pieces tell you that you are literally fucked, right, or that your positions are gone, the money is gone. Then confirmation bias works in a way that you would underweight this 97% of the articles that come out, and you would focus only on the three remaining dots, three remaining headlines that would just confirm your view, right? And you
only hear the things you want to hear, obviously,
so that you feel exactly more attached to it. So all of those biases, especially emotional ones, again, this hindsight bias when you think everything was obvious, right? And if it was obvious, then why are we here, suffering this? Of course, it was not obvious. Nothing is obvious. Everything is obvious in hindsight. So processing for all of those biases actually puts you in this stage of denial, right? It's not accepting. It's not letting you accept your reality with this, where you fight there's this conflicting view and not letting yourself absorb it, understand your situation. Finally, when you kind of like process this a little bit, you start figuring out, okay, I'm fucked. Like, I fucked up. This is bad. Right. And you're starting getting angry. So you start kind of like, backward rationalizing that with the bargaining and say, okay, like perhaps I could have done that, but at that time I didn't have enough time. I couldn't do it, per se. And you start kind of like, again, trying to justify yourself. And when you give up, you actually just fall into depression, right? But this whole recovery process, and if you want to recover, this PDF gives you the guide for it. And it starts with acceptance. Right. So no sooner can you ever start your recovery process until you meet acceptance. And this acceptance is a very difficult kind of like a statement to yourself. because this is what it says, like lessons learned, time to move on. Okay, as in I fucked up. I don't really, again, just try to prove anything, wrong. It's not the market that was wrong. It was me who was wrong, right? It's not the market that lost me money. It's me who lost me money. And as long as you accept it, that you need this change, then this is where the recovery process starts, right? For anyone kind of like getting out of the depression. So acceptance. And personally, you could reach a couple of this. You could have a couple of different ways on how to reach this acceptance. For me, the meditation and prayers help, right? So I give a little bit of myself being Christian, Catholic. I pray to Jesus. I pray, whenever I kind of like wake up in the morning and run my dog for the walks. So it helps you, distance yourself a little bit, helps you reach this tranquility and peace of mind, right? And physical activities can help as well. For anybody who wants to know more about, those meditations, prayer stuff, I have tons of this. So feel free to drop me a DM on Twitter. And finally,
so what should people do once they accept it? And then I want to also obviously move on to charts while we have people here, since it's Tuesday. So yeah, what's the actual strategy then once you've sort of accepted it?
Correct. Once you accepted it, you can start and focus on your recovery program, your recovery plan, right? So you have to, of course, put in a lot of time and dedication. It's not impossible to recover big losses, but the bigger the losses, the harder it's going to make it, and potentially the more time it will require you to do so, right? So first off, it starts with, again, understanding and acknowledging that there are no holy grails, that there's no quick rich scheme situation that you overnight can make it all back. It's going to take your time. You have to prepare and accept that it's going to take you time. And only through this persistence can you really achieve those results, right? And this persistence is additionally supported by something that we know as a trading system. And trading system is a set of rules that you agree and consent to discipline and follow within a consistent regime, right? It includes, according to the turtle traders from the 80s, a very popular trend following strategy, 6 different factors. And those are the markets. What do you want to buy or sell? Specific market. It includes the entries, exits, stop losses, the position sizing, and the tactics or techniques, right? Which is, again, the application of technical analysis. So what kind of like moving averages you want to use, or perhaps you want to buy every time the price crosses a moving average, or every time there is a positive crossover to the upside of the averages, let's say 50 and 200, right? And perhaps you're a mean reversion trader. However, the best and the most profitable systems are proved to be trend following, right? So for most of the time, 70-80% of the time, the market moves in ranges and the boundaries. And only 20% of the time, or 30% of the time, it actually launches and moves to those big tails that tend to persist, so-called trends. And your job is, in expectance of the best profitability, is to position yourself in the waiting mode and cutting into small losses. You're going to face a lot of small losses. 70% of the time you're going to lose on the paper, but the losses, when they're kept small with the protective stops, they can allow you to kind of like, again, get chopped a little bit on the sideways to get finally this reward, this delayed gratification, 2 marshmallows from the market itself when the tail develops. And that's where you position yourself in the rally direction and the trend direction, and let it all kind of like, again, play out while you're there patient. And of course, there are many, many styles and strategies. You should decide about your own, again, strategy, which takes you from point A to point B, right? This overall, again, outlook, whether you want to be buy and hold trader, right? Investor, which is very difficult to win over. Perhaps you want to be a day trader, right? Or a position trader. I myself, I am a position trader. So again, I position myself in the direction of a trend, right? I don't buy and hold for decades, but I position myself once in a while, once every couple of months, when the trend arrives, right? I position myself in the direction of a trend and rally along with the trend. So here is a little bit of a visual, definitely not going to, again, read it out loud, but you're going to be able to download this PDF free of when it charts. Like,
yeah, you guys can download all of this for free, which is awesome.
Yeah, I'll get this full PDF on the website in a second.
Yeah, I mean, I want to ask you a question though. So obviously you just drew, you made the comment, obviously, that markets generally chop sideways, and what we need to do is identify the trend and figure out which way it's going. That's where the profit is made. Is there anything you're seeing on the specific charts now that would help indicate? Because we have been obviously chopping sideways. I mean, Bitcoin effectively for 3 weeks has been trading in like a $1,200 to $1,500 range, but mostly in a $400 to $600 range. I mean, this is about as choppy and sideways and non-trending as you can get.
That's true. That's true. I have a chart, and actually, I have a chart which I'm going to display, right now in this updated form, because this is one and the same chart that you see up here. However, it's of course taken some time ago, but it does overall tell you about this simplest moving average crossover system for 50-day and 200-day averages. And this very same chart, again, with a recovery plan, can be installed in order to again just try to recover faster. And for my chart, I have it all the way here. Right, this is the same chart with this chance that is kind of like, again, updated. So we are here between $16,000 and $16,500. Just jumping around locally. So it's not necessarily the best environment for the trending market, but the trends are likely. Again, you get chopped a lot in sideways, but when the trend finally catches, then you rally from here to here, right, and the other way around. The last sell signal on the system that is displayed in this PDF actually still resists to give a bullish signal, right? So we're still in this bearish mode, still declining 200-day average, which tells you that it's still a bear market, regardless of what stocks do, because stocks look a little bit better, which of course brings this inverse relationship right now with Bitcoin after the FTX collapse, right? So reality is we're trading below the support, which is not positive. We are trading below this overall, again, descending triangle pattern as well, which brings the target somewhere in the $10,000 region, right? This is measured move, technical objective. Where we get there, I don't know. But I know that the longer we stay below the support, closer to 16,000, with the miners cost, let's say, like we as we speak, let me just launch it.
That, by the way, just for clarity, that support you're talking about is around 17,600, right? That's the June low. Is that where you were pulling that off of?
Yeah,
basically exactly. The low, what was the June low before the FTX crash? Yeah. Okay. That's now resistance, yeah. Obviously. Yeah.
Correct. Right. So the average cost, of course, difficulties decreased a little bit, but a couple of days ago it was 21,000, right? So there is this massive gap between the average cost, the production cost of Bitcoin, and the actual, prices and rates. So this puts a lot of supply pressures and selling, pressures on the miners. And eventually, the longer we stay below the support, right, the bigger the chances are that it's going to resolve to the downside, because sellers, the miners, would eventually have to cover for the losses and close their unprofitable businesses because they cannot run it any longer. And if that happens, then there is an entire, cascade of stop losses waiting up here that can trigger and not, then increase the volatility to the downside. Again, following with this chain reaction that pushes the miners off the cliff even more, right? That forces them to sell off. And there might happen the situation, again, hopefully not, you hope for the best, but get ready for the worst, that you see this cascade of sell-offs, right? First of all, because the retails kind of like give up on that at all, right? All the stop loss trigger, this decreases the prices, which makes the miners sell off, which pushes the supply pressures even more, right? And eventually it may meet in this self-fulfilling prophecy mode, just because of people fearing that this $10,000 breakout objective, right? Otherwise, we want to see Bitcoin over the long-term trend, and this long-term trend resistance is at 21,700. So until we get there, S&P 500 respectively is closer to its average, freshly rejected a little bit. But Bitcoin is here. S&P 500 is here according to its own moving.
That's the 200 so simple MA, correct? Just for people,
that's
the
correct.
Red line. Mine are red and blue as well. And now we have them all, obviously both the 50 and the 200 have rolled over and are pushing down. So very hard to believe that we're in any sort of uptrend.
Correct. Final thing is, that it's, of course, like I said, there is no holy grail. There is no way to predict what's going to happen tomorrow. Perhaps Elon Musk comes out one day and says that he's Satoshi Nakamoto and that he's going to make Bitcoin a global revolution or whatever. You never know that, right? You never know when the war expands as well and engages other countries. So we only know what's in the chart, and we cannot hop into the future too distinctly. But we also know that there are fake patterns, fake breakouts, just like we had this fake breakout on top. And those fake patterns occur. And typically they have this reverse effect and outcomes, right? So there is a chance, there is the scenario, of course, a positive, which is not really looking likely this far. But if Bitcoin manages to break back above the 17,500, this can trigger again and force all of those people who are underwater here to cover. And to cover means to buy back higher, right? Which pushes the prices higher. And additionally triggers all the retail investors, kind of like follow through because they see bullish signal. pushing the prices even higher, adding a little bit of this self-fulfilling positive feedback loop where it kind of like one promotes another. And the failed patterns actually like to perform better in the opposite direction, right? So if you have a failed pattern, failed breakout that initially was downside, your anticipation is that it's going to continue downside. However, if it's proved fake and failed, that it may lift up the prices even higher, right? Which could be potentially towards and over 21,700. But until that happens, this is just a wishful thinking because the situation is not looking good. And more likely, it looks like technical analysis tells you it's looking to resolve to the downside.
Yeah, I mean, there's literally nothing that shows any indication of an upward trend right now. That doesn't mean it won't happen, but like if you're a technical analyst and you really zoom out and look at it objectively, you've got everything pointing down. That usually means we'll probably like have a God candle to 25,000 or something to make everybody get short squeezed. But hey, that's why it doesn't work 100% of the time. Is there anything that you're actually looking to trade right now? Or are you just sort of sidelines?
I tell you what. So I myself, like I said, I'm a position trader, right? I position myself in the direction of a trend. So most of the time this year, as you can tell, the trend has been down. So I've been cashed. I've been only kind of like jumping, and get chopped into sideways. Every time Bitcoin went sideways, I got chopped a little bit, but the losses were cut small, which let me save about 85% of my entire Bitcoin holdings. The value of the crypto portfolio. So that's the main dominant tendency and trajectory that I'm looking in the market. And until it's invalidated, or unless it's invalidated, I remain like that. So I kind of like am not trading much. I'll have my long-term portfolio kind of like again on side holdings for Bitcoin and Ethereum, which I will just scoop more if we get towards like $10,000-$12,000, hopefully, because otherwise, it's just boring, to look at Bitcoin just struggle somewhere in the $200 range, for a few months. So I better prefer, this quick slash, this decapitation to 12K to let everybody kind of like capitulate who is not ready to continue to trade and let it just reverse for the sake of it.
Yeah, the interesting thing in this scenario that I've never really seen in markets before is it's sort of this forced capitulation because people literally just lost access to their money. It's one thing for people to emotionally say, I'm out of here, I'm selling. And that's the kind of capitulation we usually see. But now it's like even if they didn't want to capitulate, they can't participate anymore because their funds are locked up in Chapter 11 bankruptcy.
No, that sucks, man. I mean, that sucks. So yeah, like I said, I mean, it's in my opinion, it's good to hope for the best, but be ready for the worst, right? Neither way, you're surprised if it comes because you're ready for both cases.
So you would say people should absolutely then, I know no financial advice here, but I would say you should absolutely have bids sitting down below 14, 12, 10, just in case.
Yeah, that's going to depend on everybody's preferences, but myself, I'm waiting for 10, 12K. I think it's definitely not out of the horizon, not out of the woods. We're not out of the woods. The macro is still, still not looking good or hawkish or bearish. If we are to put it this way, soon the FOMC is going to add, probably another rate hike to the game. But we'll see. Some first initial stocks again, like Dow Jones, broke over 200 the average for the first time this year. So there is some light at the end of the tunnel, some first spring signals. But Bitcoin is heavily deviated to the downside and really trading inversely to the stocks right now. So as long as it does, it's more likely to continue this way rather than reverse in any time, right? So
this was
stocks may continue to rise.
Certainly not the break in correlation that we were looking for, right? Everybody wanted Bitcoin not to be correlated to stocks anymore. We didn't want it to happen when the DXY was dropping and stocks were going up and we were dumping. Do you have any specific thoughts on Ethereum versus Bitcoin right now? I mean, if you had to choose or if there's anything you're looking at there, I still think Ethereum looks slightly better personally.
ETH or, hang on, let's see if it gives. So this is ETH dollar. It's looking like just compare the difference deviation below the 200-day mean, right? It's 21%. For Bitcoin, it's right now, to make it back, it's about 35%. So, and this is the same average, right? So it just shows you again this relative weakness and how stronger Ethereum is when compared with Bitcoin, right? So this also gives you this ETH Bitcoin kind of like relationship. You can tell that it's stronger than Bitcoin to the dollar itself. So if I were kind of like, again, to show and to, it's a matter of which is not stronger, but which is less weaker, basically, which is weaker,
It's
right?
like the lesser of two. It's like voting in a political election. You just choose the one you hate the least.
So Ethereum is going to be this one for now.
Yeah, which makes sense. Also, I mean, just looking at that, you can see how far off the June lows Ethereum still is, and that Bitcoin smashed right through them on the FTX disaster. Right. So I think from the bottom in June, Ethereum showed much more relative strength to Bitcoin, and on the drop is still trading. It's like 1,200. It's still 50% above the June low, and Bitcoin that's now resistance.
Yeah. So lots of relative strength ETH to versus Bitcoin for sure, right? So typically, again, this relative strength paradigm momentum principle says that the outperforming assets will continue to outperform more likely than inverse, right? So because of those trends, because those trends tend to persist, and that people have this persistence in applying the same, anticipation, so that they would expect that Ethereum is stronger, so they would put more money, which actually makes Ethereum stronger than Bitcoin, right? So it's this funny self-fulfilling effect. But other than this, I'm, like I said, I'm making just microscopic moves, kind of like if I get a signal to buy somewhere over $17,000 for Bitcoin, then I may buy, but all of it is protected with the stops, right? I don't get any comfortable, safe, certain positions, right? This is not the environment for it. And this is a waiting game, right? This marshmallow test. The longer you wait, the more patience you commit, and then inject in your trading, the bigger the reward is going to be. But also, if you want to pinpoint the bottom, it's going to be extremely risky, right? Because you are trying to aim for winning the lottery, right? So what are the odds you win the lottery? What are the odds that you are the only person in the entire goddamn world, who is going to catch the bottom? Right, the chances are low. So if you bet all your money on catching extremely low chances, you're going to actually get with no money whatsoever right before the market actually reverses. So definitely not something that I recommend. Most likely, just position yourself again in the direction of a trend. You get chopped if small stop losses are applied, but at least you don't lose your entire portfolio when the shit hits the fan, right?
That all makes perfect sense. I know that you're generally bullish on metals and always have been. Is there anything specific you're looking at there before I let you go? Sorry, I know we're probably over your time, but
no,
that's fine. You can't leave.
That's fine. I know anything for you, man. Yeah, listen, I have. Let me search for them. Where can I get you this?
I put them on the spot, guys. That's what we do.
That's fine. Let me try to get this one. Let's see what we get. So typically, some time ago, making the precious metals conference kind of like presentation keynote, and overall the seasonality pattern was optimistic for December. Was much more optimistic for December, right? But it doesn't guarantee anything, of course. It just says that seasonally there is this positive tendency for gold and silver, mainly for gold, but silver is this tiny little brother to gold, right? That kind of like, again, is there like this tiny little brother that is way more volatile, way more aggressive, way more ADHD, and then just playing all around. And gold is somewhere more stable there. So if I overlay actually the price, let me put it up here for gold. Let's see what we get. All right, let me hide the volume. And what we see is actually, again, the price of gold at the bottom, the price of silver. So there's an overall, of course, decreasing tendency for most of the year, right? Silver is getting a little bit more sideways than gold. Gold was a little bit more decreasing. However, this double bottom, if you will, is in a bit of a higher highs, higher lows, for silver. It's somewhere there at the verge of breaking, over 200-day trend, 200-day resistance. Again, 200-day is a specific average, also because of self-fulfilling reasons, but it's a nice indication of the long-term trend of this primary bull market or the bear market, right? So if in this sense, it tells you that it's a bear market per se this year, right? And even earlier, since the mid last year. But other than this, the the more attempts we have to break above, right, the better. Of course, the high interest rates are not too much positive for the precious metals, and the job of the gold, right, and silver per se as well, but it's a little bit more volatile, is to maintain its value, right? It's not to give you any 10x returns over the next 2 years, but it's supposed to protect your capital, and in its own of its own, I think it's doing a pretty good job, right? It's just kind of like chopping around similar levels, a little bit up deviated, a little bit down deviated, but it's holding this main relative value somewhere close like 1850, sorry. For silver, it's of course around $20 per ounce, right? So it's I have a lot of, I have probably around 25% of my portfolio total in gold and silver together. So wow. Yeah, but this is it, with many ask, people how you manage your portfolio. The simplest answer is that for the typical trader, you would get 5 fractions. Let's say you can have 4 or 5 fractions of different negatively correlated or inversely related assets, right? So if you have Bitcoin, have dollar. If you have gold, have some cash to it, right? If you have, again, stocks, just make sure you have something that trades inversely so that it takes off a little bit of your profits, but it also reduces this downside volatility when shit hits the fan. Technically, otherwise, again, we are at the resistance. Strong recent breakout attempt, right? So the resistance, but there is some try and attempt to follow through. But as long as it fails to follow through, you're looking at this kind of like fake out scenario. But overall, like I said, to me, it's fulfilling its job, maintaining this relatively stable levels. And silver is a little bit of more speculation than gold itself. But Q4 typically more bullish than not because of the seasonal adjustments. People, buying jewelry for the end of the year, for the Christmas gift, some tax write-offs, and all of that stuff typically pushes the price of precious metals higher towards the end of the year.
Awesome, man. Well, I'm going to let you escape. So tell everyone where they can follow you in general, but where they can find that PDF guide specifically. I know it's on your Twitter, but.
Yeah. So my Twitter is it's at crypto_burb, right? Let me try to display it at crypto_burb.
I gotcha.
Yeah, that's it. There is a pinned tweet with my PDF. Otherwise, you can just head in straight to theburbnews.com, literally theburbnews.com, and that's where you're going to find it. Just leave your email or your name, and this is going to hit you immediately with a free PDF copy. That's all.
Amazing, man. Thank you so much for taking the time. I know you're a busy man, and for always, as I said, staying positive and offering people practical advice for how to get through this, because it's very easy to get caught up in the fear and just become a reporter of conspiracy theory and not actually try to help people find their way through it. So we really do appreciate that. Always love having you here, man. Thank you.
Love that you have me back as well. Much love, Scott, to you, and everybody. Make sure you appreciate Scott. He's an amazing gentleman.
Thank you, man. We'll speak very soon.
God bless. Bye-bye.
So I'm going to let Burb go for 1 second. Tomorrow, I just received confirmation. I believe that we're going to have, we try to focus on-chain on Wednesdays. I'm going to have Willy Woo tomorrow. So that's going to be monster, massive, huge, epic, bigly, hugely, whatever words we make up these days to be extremely hyperbolic. So you guys do not miss it. Tomorrow, we got Willy Woo. And then, of course, we'll have our roundtable on Thursday, continue through the week to the weekend review on Friday. Thank you guys for tuning in. Go give Burb a follow. Love ya. Peace.
Let's go.